Yeah, it's live stream. It's live streaming now.
That's my chair. Okay.
I'm gonna run over to my Facebook and
I've got mine up and I've got YouTube up. So.
well, I'm just gonna make it. And the YouTube comments were coming through yesterday.
Yeah, they do.
I just have to make mine not private, make it public. Okay,
Cool.
and like that, we are off. I'm gonna close out all this other stuff though.
Okay, I think we are up and running, guys.
I'm gonna go ahead and let everybody join.
Yep, go ahead. Yep, here we are.
Yay!
I'm recording.
I don't see Jason.
This is Jason.
I'm here.
Oh, there you are.
Some of the
Well,
cheeky
I thought they stayed pinned up, but I have to pin that up on my side.
Hello.
Hello, everybody. Hope everybody is doing well today. Happy Thursday. One more day and of live classes. So don't forget, guys, if you we have this class now, we're going to be going through a micro lesson of divergence. So we do have multiple lessons on divergence in our curriculum. But we're not going to cover all those right now. We're just covering one of the lessons. And later on today, Angelina will be going through everything that we have in the course, just for those of you who don't know what we have in the course, to kind of go over what we offer. You'll see how some of these videos work, like the lesson videos, all that kind of stuff. So I think that's a good idea to be at that if you're curious about that. And hello, Dennison, lovely to see you. Okay, so
Hi, everybody.
yes, so first things first, my name is Lindsay Duff. What's that?
Everybody here?
We've got a good amount of people in here. So, well, it's just after 12. We do kind of want to give people a few minutes to get in here, but oh, can everybody hear? She said, is everybody here? I thought, but she said, can everybody hear? So everybody can hear me all right. Go ahead and, give me thumbs up, PK. Thank you, sir.
Can you hear both of us?
What's that?
Can you hear both of us? You can hear me as well, yeah?
I can hear you good. Yeah. Okay, cool. Thank you, Tim, Ruben, Cesar, Ryan, PK.
There's a lot of familiar faces in here.
Yeah.
Good to see you all, guys.
Well, okay. So first thing I want to do is introduce myself to those of you who may not know me. My name is Lindsay Duff. I am the creator here at Responsible Day Trading, but honestly, I don't do it alone. I wouldn't be able to do it without this wonderful team that I have with me. So I am from Sugar Land, Texas, and currently talking to you from Jamaica. Because like we said, if you can work from anywhere, why not choose a beautiful sunny beach to work on? So, oh, Dennison says, nice to meet you, Jason. So yeah. Dennison is actually one of our students, and he's going through the curriculum right now. And he's had both of us work on his homework, but it's mostly been Jason that he's working with. So, and you know what, I'm even going to change my name here. So my name is not Responsible Day Trading, although it could be. So that's a little bit about me. I've been in this business for about 17 years. I've worked with several different companies, helping them create their curriculum. I noticed a lot of things that were missing, a lot of pieces of the puzzle that were missing in a lot of these places. And I also just noticed that the students weren't getting what they had signed up for and what they had been promised. And that was to help them become responsible day traders in a sense, right? So what we are doing is making sure that we're, excuse me, there with you every step of the way. So that was my inspiration for starting this and doing this. And I really love all the people that have come on to work with us and all the people who come in as students as well. So I will let Jason introduce himself now, and we'll go from there.
Yeah, so hi, so I'm Jason Jordanella. I'm head coach at Responsible Day Trading, and I'm based in London in the UK. I'm a former student as well of Responsible Day Trading. spent many years working with Lindsay and RDT, and subsequently went on to become a coach and then head coach at this amazing trading education company. So it's my privilege to be here working with you all. We have a lot of great students. I really enjoy working with you all. But if you're new to the group, welcome, guys. Hopefully you're gonna learn something out of these classes that we're putting on this week. So the floor is open to you if you want to send some messages or ask any questions. Hopefully you're going to get something good out of the lesson today. We've got a really interesting one with divergence, a topic that a lot of people are interested in. So we'll get to that soon. And that's it from me.
Jason, how long were you, just curious, I can't remember how long you were trading, working on becoming a profitable day trader before you started with us?
I'll have to think right back to the beginning, but going back to the very beginning, it's I think it's 2009 when I was first introduced to the markets, the futures markets. And my story is, it's a bit of a long one, but just to give you a sort of short summary, really, I have a professional diving background, professional diving instructor. And at that time, I was traveling, living abroad, and I had a lot of downtime on my hands in the evenings outside of when I was working as a diver. And I was looking for an extra income because it wasn't the best income out there, really. It was more of a lifestyle. I think I was earning $20 a day. But I was living in paradise. I was living in the Caribbean, so it was all good. But I knew that kind of income is, I was in my, late, I don't want to give my age away, but yeah, I was old enough to be worrying about whether I could carry on with this income for the rest of my days. Actually, I do have an engineering background as well. I've got a professional engineering background, but I got tired of that and I wanted to travel and explore the world. So I was lucky enough to be able to do that. And yeah, I had some downtime on my hands. So I just stumbled across, like a lot of you would have done, a YouTube video introducing futures markets. That's the first thing that I sort of stumbled across. Got into it. I signed straight up for pretty much the first academy that came across my feed. It's quite a well-known academy. And I worked with them for a couple of years, and I got, let's say a fairly decent introduction or foundation into trading. And actually that was an organization that Lindsay worked with quite closely, and Angelina, right, as well.
Yeah, Ange worked there too.
Yeah, so it's a long history. It's a small world, the trading world, right?
Yeah.
Especially the education world. So I signed up, I paid my money, I thought I learned what I needed to learn to go live. Fast forward maybe a year into studying and working on learning to trade. Took all my savings, put it into an account, funded that account. And I think it was a couple of weeks before I'd blown pretty much my entire account, which was a significant amount of money for me. I think it was a whole summer of earnings, Yeah, so completely disheartening. And I thought I was ready to go, clearly wasn't. And then I kind of repeated that cycle a couple of times, before realizing I better, something's not going right. I'm doing something wrong here, or maybe what I've been taught is not quite what I think, to be the full curriculum that, the full spectrum of knowledge that I really needed to be able to do this as a business successfully and consistently. Lindsay helped me out a lot with a lot of gaps I had in my knowledge that, she sort of helped me out with. And that's how we really connected and started working together. And at that point, I think you were maybe fast forward a couple of years and you're now leaving that organization for your own professional reasons and setting up RDT. So I signed straight up. Actually, I think I paid you very little bit of money, just a token gesture really to get involved, because I was one of your first students really. and and you were building the curriculum, and I think I was a bit of a guinea pig as well. So
Maybe just a
but,
little bit.
yeah. But I immediately found extra that I can't say it was like the complete education because it's an ongoing thing, right? But at that point, it definitely opened my eyes to more about what I didn't know really than what I knew, and just truthfully, it's been anyone that's learned to trade or and is a professional trader or a successful trader realizes that it's an ever going journey to continue growth and improvement. There is no
and I'm learning stuff. I still I'm noticing and back testing things that I'm like, oh, well, this is something I see the market doing that I wasn't paying attention to before that can help me. So, and finding ways to incorporate that into the lessons. I mean, down to, the white BBs on the MACDs. We didn't have the BBs on the MACDs before, or the white BBs. Right. And I think you actually showed me the gradient MACDs, but they were just gradient MACDs at that time. Yeah. So that's what we did at that point is we had them, and I'll actually just go ahead and share my screen. So, because we're going to be talking about this in just a little bit. Everybody see the 3 charts there? I'm going to pull the chat back up too, so I can see that. There we go. Okay, good. So these MACDs, which guys, these really are our bread and butter. And Jason, I'm sorry if I cut you off. Did you have?
No, that's all right. Give me a chance to take a breath. Anyone knows me knows I go on a bit.
Maybe just a little bit, but that's okay. That's why we love you, because you're thorough.
Yeah, very thorough. Very thorough. That's right.
But when I initially was using MACDs, it didn't have these gradient, and we found another MACD that had the gradient, the ADX on there. And so what I did was hire somebody to combine them. And that's how we have the RDT MACDs. So they are pretty unique. I don't know, someone else may have created them by now for all I know, because they don't hide our settings or anything like that whenever you have the indicators. The first company I worked for was charging $16,000 to lease these indicators, to lease the MACDs and the EMAs and all that. And I didn't know any better at that time. I just thought that's the way it was. I thought, oh, they created these, not knowing you could find them online for free. So, even though we've developed them, we make them available to anybody who wants to use them. So, and that comes in our platform fundamentals course. So what I do, oh, go ahead.
I was going to say they were a bit of a game changer, actually. I would say an evolution of the MACDs as well. They just add that extra bit of information that is very useful. And
absolutely. Like when people ask, everybody has their own edge. The MACDs and the way we use them with divergences, that is ours. That is our edge. That is what we use to, I don't think I could not trade without them.
No.
So they are pretty big for us.
Yeah.
And so go ahead.
No, I was just going to say, like the MACDs personally, it's definitely RDT's baby, like our edge in day trading. There's a lot of technical analysis involved in general. There's a lot of people that use different types of indicators, but for those of you who don't know, MACDs are one of the few indicators that are not lagging with the market, right? They're not printing information behind the market, behind price. Right. They're live. So if you notice the MACDs now, we've got the live market open. If you look at those BBs, you can see they're plotting at the same time as price. So that's one of the key differences between that and, I don't know, the VWAP. They lag a bit, and there's different levels of lagging depending on the indicator you're talking about. But the MACDs are about as close to live printing of the indicator as you can get. Really, that's one of the main reasons why we love it.
Well, it's this form of MACD too, because there are people who use the MACDs that look more like a histogram type thing.
Yeah.
And when you have these BBs running with it, you can see they move with the price. And when this gets to 0, it'll stop plotting this bar and that BB stops plotting. Then the next one starts. And as I said, divergence is something, you know, and the MACDs are something that we are just, that is our bread and butter. It does work with things like our EMAs. So you see these lines, we only use 3 indicators, guys. We use the EMAs right here. There's 2 on each chart. And this dot, this close on the bar, is actually a 1 EMA as well. So we have 3 EMAs there. We have the MACDs and we have the tick counter. That's it. That's all we use.
Yeah.
Okay. And like I said, the first company I worked with had something like 19 indicators, and it was crazy. Tim says the gradient color helps as well, just for that quick visual on momentum and slowdowns. Absolutely. Yeah, because you can see it when it's making these peaks is when they're at the widest. I mean, obviously it's going to have some white along the way sometimes, but especially, and we're going to talk about these peaks and the divergence in just a little bit too.
Yeah, those MACDs combine, you know, the normal regular MACD that we used to use without the gradient, without, which is an embedded indicator. Obviously, they show momentum, strength, and weakness, but the color coding and the gradient added on top of that is the trend, right? So it's a combination of trend and momentum with those 2 indicators together, which gives you the full picture, really.
Absolutely. Well, you know, let's go ahead and get into it and talk a little bit about this lesson. So what I'm going to do is I'm going to actually pull up the lesson that we use for our divergence lesson. What is it down here, right? Oh. Yeah. So this is part of our new curriculum, guys. This is what it's going to look like. It looks a little different than our old one. These videos and the lessons are much shorter than they used to be. It was, 15, 20-minute lessons. These, we don't have one that goes over 13 minutes, I don't think. And that's like the longest one. Most of them are between 5-7 minutes or so. And so something else that we did here, which you won't see in this lesson because we're just going through the actual PDF. Because in the lessons, you get the PDF, you get a video, so you can read with it. You can just watch the video if you want. I do suggest watching the videos though, because what we have in those is we have a little bit extra that we don't have here. And that would be like when the words are going across, we're going to have a little bit of an illustration showing you what all that means. Because sometimes even me, myself, reading through this, I mean, I know the lessons like the back of my hand. So reading through this, sometimes it's just a lot of words, and without being able to visualize it, it gets a little difficult. So just know that as we're reading through this together, we are going to explain what it means in the next few slides. But if you're watching the videos on the course, you will have a pop-up that shows you what these mean. So just letting you, soak that in a little bit. Okay, so let's talk about divergence. Now, divergence brings attention to the potential shift in direction. Divergence occurs when the price and the MACDs disagree on the direction. One will signal more up and the other will signal more down. So the MACDs will say, hey, we're going to the upside, and the price is like, no, we're going to the downside. And that helps us to really recognize when that shift should be coming about. So the ultimate job of divergence is to move the market in the opposite direction of the current move. Most ideal for completion is for price to reach an area for a bounce or changes the trend of that chart by crossing the EMA and the 0 line. And let's just come back here really quick to look at these pictures. And when I say crossing the EMAs and the 0 line, I mean going from below the EMAs and the 0 line to back above the EMAs And this is our zero line on the MACDs. So crossing back above the EMAs, crossing back above the zero line lets us know that, I mean, it doesn't have to go all the way that far, and it doesn't sometimes, and doesn't a lot of times, but it does give us the information that it has the potential to shift and the potential to shift to the opposite side, switching the direction. Okay. So let me pull this back up here. Now, the bigger the tick chart, the more the weight the divergence has. So if we see a divergence on the 10,946 or 28,657 or the daily chart, if we see that setting up, we're going to pay attention, because we're going to know that that has a much bigger potential to give a bigger shift. Now, if you see a divergence on the 233, you're going to be paying attention to that as well for a short period of a reversal, but those won't have as much strength to shift the market all the way above the EMAs and above the zero line like it would on a bigger tick chart. So, and the more charts displaying divergence, the higher probability for a shift in direction. All right, so Jason.
Okay, so let's talk about the potential for divergence. So what this is the first leg of the move will tend to show a strong push in the MACDs, but not always in the price. The price will push to equal the previous pivot, but the MACDs will not. This is our first main sign that we may have divergence coming our way. The MACDs will have a lot of work to do in order to catch up and equal the previous high or low of the original move. If the MACDs catch up and equal the previous pivot, the divergence potential is no longer there, which means the price and MACDs are in agreement on direction. Potential for divergence does not mean divergence. It simply means to keep an eye out for it. Okay, so we'll
and this
probably
is definitely one of those areas that we're going to be using the epic pin. Sorry, this is one of those areas that will have that in the video. It's going to have that so you can see it and read it and connect those words a little bit better than just reading them. I'm sorry, go ahead. Sorry to interrupt you.
I was just going to say that, what you said really was that obviously a lot of this, a lot of words that we've got here obviously need that visual for you to understand. So throughout our curriculum, you'll see lots of visuals, lots of charts, everything's drawn out so that you can, visualize what you're reading here. So this is just an insight into this lesson, really, the actual full lesson, which we can't unfortunately show on this presentation, is a lot more involved. And at the end of it, you'll have no doubt you'll understand what's going on. And obviously we have the homeworks to follow up on that as well. So you get the, you'll do your lessons, you'll do your homework, we'll review that, and we'll give you the follow-up prescriptive teaching if necessary, so that as you move through the curriculum, at every point of that curriculum, you will be ready to move on to the next lesson and fully understand what's going on. So it may seem a bit like I'm not really following along here at the moment, but it's just an insight.
Yeah, and in the next class, we're actually going to have examples with the epic pin so you can see how that works together. So don't worry about that, right? So if y'all come to that class that we have at 4 o'clock today, it's going to have some examples in there with the videos.
Eastern time, right?
4 o'clock Central time.
Central time, sorry, Eastern.
Yes.
Can't keep
something like 10 o'clock your time, I think. All right, so let's see what all these words that we just said meant. So what I look at first is the price has a little bit of a weaker move back to the downside. Now we're remembering that these BBs are dots, right? So they can spread out a lot further, or the price can spread out a lot further than that. The BBs can only travel so far, but when the price kind of slows down and has a weaker move down, we see those BBs push really hard down. It already tells me that the BBs are really pushed a lot further, and it's going to take more work for them to get up towards the previous pivot. So you have this first pivot in both the price and the MACDs. The price pushes down, the MACDs push down. They both push back up. Now, oh, what happened there? Just went backwards. Okay, so as we get up to this area and we equal this previous pivot point that happens right here, the MACDs are leading lower. So the price has equaled the previous pivot. MACDs have not quite gotten there. That is what we call potential for divergence. That means we may have some divergence coming our way. Something that lets us know we might not see divergence is the strength of the MACDs, but those are things that we talk about in the lessons in the future. Now, if we look over here, this is the exact same example. Price has come down, it's come up, it's equaled that previous pivot point, but it continued up with both the price and the MACDs. So the MACDs had come down, equaled that previous pivot point. We no longer have potential for divergence. At this point, both the price and MACDs say we have the potential for it to continue up. So divergence is kind of washed away at that moment. So we first want to learn what the potential for divergence is. Then we're going to learn a little bit more in depth about seeing some actual divergences. So I'm going to let Jason take this next slide. Oh, and Jason, if you want to request to use my mouse, that's the word I'm searching for. Control.
Oh, really? Yeah. You have to remind me how to do that.
Hold on. There you go. I just gave it to you.
Okay. All
So
right.
go ahead.
So can you see that? Is that
Yes.
moving all right? Yeah. I think, yeah, just before I move on to this slide, I just wanted to mention like why we're talking about this, and we're explaining divergence, but why is it important? Why do you want to know about divergence? Why does it really why is it really going to help you with your trading, right? So divergence is really about showing strength and weakness, which gives us opportunities, right? So it can be an opportunity to get into a move in one direction or the other because we see strength for that price action to continue in the direction, or it could be a signal to get out of a trade, right? Because we're seeing weakness and it's time to get out of that trade. So that's why divergence is so key to the way we trade. There's many parts to divergence to learn, but fundamentally that's why we're teaching this right now. So I'm going to go over this example here, potential for divergence. You can see,
I think you need to click on the screen one more time because I clicked off the screen. Sorry. Go ahead. Yeah, you got it now.
yeah. So in this example here, we have the move to the downside, we have the pivot low. Then let's look at what's happening on the MACD BBs here. We have the equal pivot low, so this aligns over here, right? Then when you see price push up, follow along here, you can see the MACDs pushing up. Then when you see the pullback here, or the move, the run to continue down on the price action, you can see that at this point here, we have the potential for divergence. And then what happens is the MACDs leading higher for the potential for divergence, we just continue through. So we no longer have that potential for divergence anymore.
Yeah, that's just what's on the next example right there.
Yeah. So we're looking out at this point to see the opportunity for divergence to take, in this circumstance, it would have been maybe a long opportunity, right, to the upside because we're below the EMAs. Yeah. Another example, well, this is the same example here we've got here. So we're just zooming in, you can see what happens is, this is the follow on from here. As we reach this previous pivot low, once we get down here, as the BBs exceed this area and the price exceed this area, we no longer have that potential for divergence. Divergence is gone. Yeah, so price is now aligned with the MACDs. They're singing from the same song sheet, really. There's no divergence. Okay. Would you like me to do the next slide?
Yep, no, I got it. All right, so now we're going to talk about when divergence does complete, when it doesn't show us the potential that goes away. So the divergence will happen at the low if the price is traveling down, or it will happen at the high if price is traveling up. So price will make an equal or higher high or an equal or lower low than the previous pivot created. At the time of the second pivot, MACDs will not equal the previous pivot, making a lower high or higher low. So that's going to be where we see the potential for divergence come in. Typically, this will give a push, even if it's just slightly the opposite direction, unless you have a choppy, grindy market. So, Jason, you want to go through this one, and I'll go through the last one after that.
Yeah. So we're looking at an example here of divergence I'm sorry.
Click on the screen so you can see your mouse move.
Okay,
There
right,
you
got
go.
it. Okay, so we're looking at an example here of, well, two different examples of a divergence opportunity for a trade to the downside, right? So what we see here is the first pivot over here lining up with this one. Okay, and then we move down, price moves down, MACDs move down. And then if you look at the pullback here on the MACDs, you can see that we've got a totally different distance. So price has exceeded this previous pivot point here, gone somewhat higher, but so we have a higher high. And in this circumstance here on the MACDs, we have a lower high, and that's textbook divergence. What that's telling us is that, you know, if you're just looking at the price action, you may think this is strong. This could be continuing to the upside. You know, it's a trend to the upside even. The EMAs look strong to the upside. Maybe you're thinking about getting in this trade to the upside to continue. But if you're focused on what the MACDs are telling you, they're telling you, especially look how bunched up together these BBs are as well, you know, compared to the strong move down here. This is a lot stronger, this move, when you see how bunched up they are and the fact that you've got a much lower high than the actual price. It's telling you that that price is actually weak, and it's a weak move to the upside, and that there's potentially exhaustion. And what that means is there's an opportunity to take a short trade to the downside, right? So you can, you know, there are other things we look for when to enter that trade. But this is a great example of divergence here. Same again on this example here. You see we have the first pivot lining up with this one. Then you have the higher high and a lower high. This is showing weakness to the upside. This may look like it's strong to the upside, especially with this sort of impulse move. Look how strong these bars are. You know, these are kind of like, we call it trader cheese, right? Where, you know, these kind of bars really get people excited and they want to jump in and get some of that cheese, right, as the price takes off. But if you're paying attention to what's going on in the MACDs, you're looking at that, you're saying something's not right. This isn't telling me the same story. It's about understanding the narrative that's going on between these two, you know, the price action and the indicator. MACDs are saying highly unlikely this is going to continue for too long. If I see any sign of weakness or failure, I'm looking for a short opportunity to the downside, because I've got that, you know, from the MACDs. Keeping in mind one other thing, we're not just looking at one time frame as well. There's no just one thing we're focused on. This is a part of a whole overall sort of holistic view of the markets, right? So we're looking at multiple time frames. We're looking at convergence of information from different indicators as well, like the EMAs, areas, support and resistance areas. It's not just about, okay, this is all I've got. It's not mechanical like that. You know, it's about being in tune, and as we like to say, learning to flow with the market, right? So that's why you've got the opportunity to the downside here. Great one.
Yes. Okay, so let me do the last one here, and this is just going to be divergence for a push up. So if the market is moving to the downside, but we're expecting the divergence to turn it around. So we're looking for divergence to the upside. Now, what we have here is we have price pushes up and then it comes back down and makes a lower low, where MACDs push up and come back down and make a higher low. Now, I do want to just point out right at this point right here is when we had potential for divergence. And the MACDs were leading about right here. So they were leading a lot higher when the price had already equaled that previous pivot. And as the price kept pushing down, the MACDs never got down to a point where they equaled or exceeded that previous pivot. So we're anticipating divergence. There are things that we look at like distance to the EMAs, reversal bar patterns. What are our bigger charts saying? Like, should this actually push back to the upside, or does it have longevity to push back to the upside? Because we may have the, 10946 or the daily chart or something just smoke into the downside. So we see this divergence, and it helps us to understand whether or not this has an opportunity to just pull back to the EMAs and push down, or this is going to have the opportunity to switch this to the upside by crossing the EMAs and crossing the zero line. So now we're looking at this to the downside. Still another example to the downside. We've got these low pivots. So price comes down, makes a low, makes a new low here. It pushes up, it comes back down in both the price and the MACDs, but we see a lower low in the price and we see a higher low in the MACDs. So what that means, and let's actually look where the potential for divergence was. Potential for divergence right here. If we go down, MACDs were leading higher at that point. So we had the potential for divergence there. The divergence continue, or the price continues down, exceeds that area. MACDs can't keep up. They can't get down and exceed this area. So they've got a higher low, which gave us the potential for the push to the upside. We had a reversal bar pattern here that we look at. We had lighter BBs, and it pushes back to the upside, crossing the EMAs and crossing the zero line. So that is what we're looking at when we're looking at divergences. There are some, like Jason said, there are other factors that go into this. Divergences that happen at the EMAs, anticipating divergences to work on smaller tick charts because of what the information tells us on the larger, or vice versa. Things that we call retracement divergence. There's 3 different types of retracement divergence that we look at. We look at, and retracement divergence is a little different than what we look at for regular divergence here. And those are all parts of the lessons that we teach when it comes down to divergence. And these are very, very important to us. So what I want to do is go ahead and give Jason the screen share, because what we're going to do now is we're just going to look at a bunch of different examples of divergence over different charts. So
okay, I can do that. I've picked out.
Let me stop my share. There we go.
Give me just a moment, guys.
Before we continue, before Jason pulls up those examples, does anybody have any questions that you'd like to ask? Nope. No. Okay, we're good.
Okay, can you see my charts?
Yes.
Okay, so this is my regular free time frame trade display. I'm going to enlarge my higher time frame display that you see on the left here. Okay, we're in the live market environment now. We're looking at the E-mini S&P futures, and it is wild today. I'm just looking at this thinking, what am I doing on this webinar? I should be trading. No, I'm just kidding. But it's mad. This is scary stuff, really. But anyway, I'm going to open this up and show you what I've done is I've just pointed out some divergences here with these yellow lines. Okay, like you saw earlier on. This is the daily chart. Now, for those of you who are not familiar with this already, I've got tick charts displayed on here. I've got these, there's quite a few marks and lines going on here. These are my working charts, right? So I've got support and resistance zones drawn out here. You can see the EMAs. These tick charts represent, each tick represents 1 day in the market on this daily chart I'm looking at here. Okay. And as we move, and as we move down the lower time frames, each tick represents whatever chart I'm looking at. So 10, 9, 46, 4. I'll walk you through that as I go along. Okay, so we've got you can see the potential for divergence happened here on the daily when the price pulled back. You could see what happened here with the MACDs, with the BBs. We maybe pull back 50% of that initial move there, but we massively stepped through this area here. And that was exactly when the market turned back in October 2022. That was the bottom at that point in time. And, we've been gradually climbing back up. There's a good example there. So if I move on to this next chart, the 28,657, you can see same thing again here. We had the potential for divergence somewhere around here. Clearly divergence on the MACD. So this looks big and strong. You may think, okay, we're definitely continuing to the downside here, but the MACDs are saying not quite. It looks like there's a disagreement between the MACDs and the price. That's when we turned around and pushed back up. Only for so long, though. We moved up back to this resistance area, put in that pivot, look at the divergence across these two pivots. So we're always looking at the key pivots. You know, you have to focus on those, not just all of the smaller kind of noisy areas in between, right? I'm looking at key pivots here, and that's these two pivots, and you can see that key divergence. You know, if you were in this, you know, if you're looking at this to continue, maybe break a newer high, you could see with the MACDs, and on top of that, with these particular BBs, that color change kicks in, which is telling you not only is the trend or momentum slowing, so the momentum strength is slowing down, but the trend is getting weaker as well. And we get that indication by the strong color change from purple to white as we fade. And that's basically just telling you this is going no further. Time to be looking
That's
for
why
a
I say
short.
it's like the chef's kiss, like that is like beautiful, right? To see that. And even though it looks like we're moving up and up, that tells us don't try and take any more long trades right now.
Yeah,
You don't have to be in the long, but don't take, or you don't have to be in the short, but don't take a long.
And if you just want to glance at this chart here, right? I mean, if you look at, it doesn't appear that strong white color change doesn't come up that often. I mean, just looking at this sample here of over a year no, it's not over a year. This is the last month, right? Or even the last 2 weeks. This is I thought it was on my daily. This is 28,657. You can see you only get that strong color change once there, a little bit there, and there. The rest of the time we don't really see it, and without even paying close attention to it, if I even look at these, I can almost guarantee that 90% of them will be a change in direction in the market. Yeah.
And those are, you know, that's on the 28,657. So those are big moves.
Yeah, these are big moves.
So that gives you a lot to play with to the downside when we see those white BBs at the top. So yeah.
The good thing about it is really you've got two indicators in one, you know, because we have to be careful and be mindful of information overloading when we're carrying out technical analysis, you know, and you start loading too many indicators on your charts, you get this situation of paralysis by over analysis, right? The beauty of such an efficient indicator like this MACD with the ADX indicator embedded into it is you've got that convergence of technical analysis in one indicator. So I don't have to look in two places. I don't have to compare one to the other. They work in harmony with each other, right? That's why it's all I ever need. I don't need anything else. And believe me, I've tried just about every indicator out there in the industry. And this is always, you know, nothing performs as well as this does. So you can just see these white BBs every single time we've had a turn on that run, on that pivot. I just noticed that now. So yeah, we've got the divergence there again here. This is this one you have to look a little bit closer here. So you could just drop a little line in here, show you exactly where this lines up, right? You can see the divergence across these two pivots here, really. So it's that one there. Oh yeah, so strong divergence of 50% pullback on this is telling you it's not going much further. It does snap back. In the end, it does pull back a bit deeper. But that was a good signal there for a long. It pulls
back a bit deeper, but it creates another divergence.
Yeah, it creates another divergence right there, extends right there, right? So you can see you get a second divergence telling you that even this second attempt to break the area is not probably going to make it. So
yeah, and that's a 40-point move back to the EMAs. So, you know, those divergences are golden.
Yeah, and just to remind you again, whenever we're below the EMAs, we're looking for long opportunities, or we're looking to get out of a trade that we're in to the downside. Whenever we are above the EMAs, we're looking for short opportunities or to get out of a trade that we're into the upside, right? Because what we're doing is exploiting really this weakness that we're seeing. Some people call it fading as well. You can fade these opportunities as well. But it's about really having that, you know, you need to know where just looking at price action, everything looks strong. You know, all of these moves look strong to me, but without really knowing where is the real strength and where's the real weakness, I can't just trade price action on its own, right? So that's what we get out of the MACDs. A couple more examples here to look. You can see this was a really strong trend to the downside, and sometimes it doesn't work. So I've got an example here where we did get a pushback. So it did give you an opportunity to get in, but the trend was so strong that it just continued down anyway. We still had an opportunity with that divergence. Yeah. Same again here. We got another opportunity back in again. If you look at the whites, crazy signal in there that this is the end of the move to the upside. Another great signal here, end of the move to the downside. Another great signal, end of the move to the, I mean, we've got like 9 out of 9 examples here, really. Another one there.
Well,
There's
and
10
also
out of 10.
like in a strong, sorry to interrupt you, in a strong market, we are going to see more divergences created, but we're looking for it to pull us back to the EMAs to give us a space to take it and continue with the trend. So that is, you know, it's a good thing for us, you know.
For me, I mean, the ADX indicator is sorry, the MACDs with the way we've customized them are the holy grail of indicators, and they're available to you for free. It's one thing having them, obviously, you need to learn how to use them. That's where we come in, right? But by all means, you know, get them, play with them, see how they perform, do some back testing and look at the charts like I'm doing with you now, see what you think of them. And if you want to know more about them, then, you know, you're in the right place. So let's have a look here with this one here. You can see another divergence here. All of these are turning the market. Every one of these are the end. That's what we want to know, where we cannot go down any further. This one here, this a massive one. This is actually, well, we're on the 4181 chart. So this is today, live market trading today. You can see massive divergence. I mean, look at that move. Who wouldn't jump into that move? You know, you get into it. At least at this point, it'll be telling you when to get out. You know, so once we start to roll here, and I start to see these couple of other BBs plotting to the downside, and that big whole bar there, and the reversal pattern, and all of that, I'm taking profits. You know, that's the thing. I'm not going to stay in it and just, you know, on a wish and a prayer that it's going to continue. This one's interesting. It's so powerful. You know, it starts fading out almost as soon as it's moving. It starts, you know, the indicator's kicking in, telling you this isn't going for too long. It does go for a massive amount of time, but it's continually fading until it gets to the full white. And at that point, that's the end of the move. Turn around. So once you learn to read this, you know, the world's your oyster. You know, obviously, you got to put a lot more things together with it. I'm not trying to sell you a holy grail solution, but I'm just showing you the power of it, right? It is powerful once you've mastered it, and that will take time, dedication, a lot of work, but it's definitely achievable. And so, you know, for a lot of you, if you're new to trading, you've never seen these charts before, you've never seen these MACDs before, you might be a bit, you know, they might seem a bit confusing, but I can tell you that we've walked through, we've taken on lots of traders new to trading, and within a couple months, to be honest with you, with dedication and hard work, they are seeing results. And so a lot of them are in this room at the moment. So here we go, another white color change. What do we think is going to happen here live in the market? I'd love to see this just pop back up, because I would expect that to be happening soon. We'll keep an eye on it. Well, that's it for me. And
I mean, it could be like it did back here a little bit, where it just rolls down a little bit further and creates another white pivot, but it is slowing and rolling a bit.
We got the potential for divergence here. Yeah,
I wanted to address, I wanted to say, Tim, you said you're used to seeing the session breaks. That is something a lot of people would do in different companies that I've been with, where you wouldn't even see the data after the market closes, but it opens back up and then there's a huge gap. And we actually take the session break line out of our charts. We make them translucent, because to me, they're just kind of a nuisance, especially once you have the bigger charts. You're going to have these session breaks all the time. So do you use the session breaks? Like, does yours cut off the data after that time? Or are you just talking about how you have the session break lines?
I think he probably means the lines, right?
Yeah.
I mean, I used to have
something that I instruct people to take off of their charts when they're here.
Yeah, I used to have them, but I think The reason I removed them was it's just that we want to minimize any distractions, and that's just another sort of thing that will take my eye off the prize of the thing I should be focused on. I just don't like seeing them on my charts. Don't know why. If I want to see them, I can plot them anytime, but you know, just having them there all the time when I'm looking at other charts, it's just something I've got used to. Yeah. But I mean, really, it's like each to their own, you know, if that works, you need to see that information. Some people do, they use it in other ways, then there's no problem with it.
Oh, yeah. Some people do that too. The different color for the overnight session. I just like, I don't know. I just like he said, I feel like it's just an unnecessary distraction because the same thought process of looking at that data still works throughout the day. So if we're looking at the 28,657, first up, I'm going to have a bunch of those session breaks in there. But it's almost like you're kind of not you per se, but it's almost like it's kind of an instruction to just kind of discount that data almost. And it's still data that creates these patterns that we're looking for, you know. And one thing I want to mention too is some people may feel like they're going to struggle with trading because they think it's a numbers game. And I am awful with numbers. Okay. I couldn't even tell you what price it's at most of the time because I'm not paying attention to the price. I'm paying attention to the patterns, and the patterns are what are important to me. So that, that is just something I wanted to put out there, that if you're like scared of numbers, don't worry, I am too. So it's okay. It's not about that. It's about reading these patterns because the market is run by people and we are predictable, right? In a sense. And so we're expecting these patterns to happen because they've happened before. That's why it goes back to prices. That's what creates support and resistance, is just every time they push it back to that area to take the trades again, or to, you know, try and take people out of their trades, all those kind of things. But yeah, if numbers scare you, I'm with you. So
yeah, I need that. Yeah.
No.
Like I say, I couldn't tell you what the price is right now. It's around 42 something. I don't know. Don't care.
43, 30, 29, 30, 20, 30, 50. Yeah.
That's not our thing. Our thing is price and pattern identification, you know, technical analysis. We are price action traders, right? But we're discretionary price action traders. So
yes,
that we're not just in a trade because we see a pattern. We got to have more convergence of information to go with a trade, and that's our edge really in the market.
Yes.
And you need an edge. You need an edge in the market, in your strategy, in your system, if you're going to be successful at this. Anybody who tells you you don't need an edge, just trade, is lying to you. That's the reality.
Trying to move this stuff out of the way. So I was just wanted to come back today also and just talk one last time about the next classes that we have.
Yes.
Yeah, it's a picture. Is that it?
Yes.
Okay. So just want to remind you guys about the class schedule that we have this week. We're coming up to the end of class for today. Angelina and Claudia will be giving our next class, which is going over the courses and the programs. You will be able to see that Epic pen being used in there, the way that the designs work with the videos, because it, you know, some people, we know that everybody learns differently. Some people are very visual. Some people like to read. Some people like to listen and not read. So we tried to hit every aspect of that. So you have something you can just read if you want. You can have something you can just listen to if you want, or if you need the visuals, that's there as well. So she's going to be going through that and the other pieces that we have, because it's not just about the curriculum. It's not just about the homework. We have other things that go on within our programs that are important for you guys to know about. So you know what you have coming your way or have your options of whenever you're here with us. Tomorrow morning, it's live market analysis. It's me and Jason and Cesar. And then we're going to have the scholarship winner announcement. Now,
yes.
Now I see Liddy in here.
Finally.
We're going to ask her to tell a little bit about her experience because she was also one of the winners last year. We're going to have Davis and Dan and Cesar and everybody just tell a little bit about their experience as a scholarship student, or just their experience here in general. So we would love for y'all to be here and be a part of it. And so that is the class today is at 4 p.m. Central Time. Tomorrow morning it's 9 a.m. We're going to do a little earlier, and then the announcement is at noon Central. Oh, yes. One last thing. We also, guys, even though we do this scholarship every fall, every spring, we also are now every spring in April, we'll be doing a in-person seminar. So we're all there for it. We have the students come, we spend 4 days together, basically, like basically a Friday through a Monday or Thursday through a Sunday, I think is what we did. And we have a good time together, guys. Like, you know, we're just like anybody else.
Yeah.
We enjoy what we do, which is, I guess, better than most people, because not everybody gets to enjoy what they do. And we feel very lucky that we get to enjoy what we do. Oh, Liddy said yes, she's going to be there. I love it. Thank you so much. And so, you know, we started this scholarship because we knew that a lot of people would feel as though that they wouldn't have the opportunity to do something like this. And we wanted to give this opportunity to people, to everybody that we could. And whenever you do have a seminar, whenever you do have the scholarship, or you're part of the VIP or anything like that, you do have one free ticket to the seminar that we have in April. So that is also another benefit to being part of the VIP or part of the scholarship winners. So, but I think that about wraps it up. Jason, do you have anything else you'd like to add?
Other than that, price action is pushing back up just like we expected.
You know what? Here, you could share really quick. Let me stop sharing.
So,
Okay.
I mean, I don't know how
up.
long it's going to go on for, but, you know, we have to make a few quid out of it. I mean, as we say, well, what do we expect to see here? Bounce up, right? Bam. Love it when that happens live on TV, of course. In reality, it doesn't always give you an opportunity to get into the trade even, but it's just, you know, we was making the observation there that how effective these MACDs are and the color change there, and it's just done exactly what I expected it to do, turn around and go up. Well, if you can figure that out 5 out of 10 times, you're made man or woman. So that's all from me. Yeah, I'm gonna get off that one quickly before it turns around. Tanks to the downside.
One last thing I do want to say is tomorrow we also are going to be talking about the prices of the program and that we have and how we can break that down for you. I mean, one thing that I think does hinder people from starting is they think it's not affordable, and we make it super affordable for people to join the school. We work out personal payment plans with people, and we already have a fairly decent payment plan, but if that doesn't work, we find ways to help them. So we'd love for you to be there so you can ask questions and just know that it is something that is doable for just about anybody over the age of 18, because you're not allowed to trade under 18.
But you can start learning.
You're not allowed to fund your own account, I believe. I'm sure you can.
You can start learning any age you want.
Definitely start learning, but you can't fund your own account until you're over 18.
Fund your own account. But there's ways around that.
I mean, there's ways around everything, but you know, so. All right, guys, well, that will wrap it up. We look forward to seeing you here today at 4 o'clock. Like I said, it'll be with Angelina and Claudia, and they're going to be giving you a rundown. Definitely ask any questions that you have. Thank you so much for being here. I really appreciate you being here.
Thank you. Really appreciate it.
And I hope that everybody has a wonderful day.
Yeah, guys, thank you very much. Glad you stuck around. Hope you've enjoyed it and learned something new. Don't forget to reach out to us. We are here, you know, or across all social media platforms, or jump on the website. And don't forget to download the free newsletter that we have. We have a 3-part newsletter. Well, I call it a newsletter. It's a beginner's guide, right? 3-part beginner's guide that if you're totally new to trading and you really want to understand what all of this is we've been going on about, it will give you a really good fundamental understanding of trading futures markets. So head over to the website, that's free for you. And it's very comprehensive. And for those of you that are experienced and just want to maybe learn something like how to create a money management plan, that is also in that newsletter as well, or in that beginner's guide. So it's more than a beginner's guide, it's like an intermediate guide as well. Jump over to the website and get it there.
Yeah. Kevin, we do have the platform fundamentals course. It runs for $50 and it has all of our indicators, and it has how to use NinjaTrader. You know, you may be very familiar with NinjaTrader. There may be a few things you don't know that we've put in those lessons. And it does have workspaces also. So, but you can take those indicators and, you know, you'll have that indicator at that point. So if you want to go to the website and go to, where would he go to get to the platform fundamentals?
You just go to the website. You want to show them?
Yeah, let me show you. Let me show you. Hold on.
So NinjaTrader is our platform of choice. You know, we are experts. So we've been working with NinjaTrader since, I think, NinjaTrader version 6, wasn't it?
Yeah, well, I mean, like I've literally been with NinjaTrader since they
day one
started, because we were using TradeStation before. Yeah.
Without a doubt, it is the best trading platform for professionals out there, you know, bar none. And so if you're thinking about what platform to get started with, I highly recommend NinjaTrader. That is going to stay with you and grow with you for your entire trading career.
So you'll see a NinjaTrader platform fundamentals overview. You can go here and you can get it from here. We do also have it in Spanish as well. And this tells you everything that it goes through. It's got the download and install, data feed connection guide, how to navigate through the control center, downloading and installing the indicators, downloading and installing the workspaces, using the tools at the top of NinjaTrader, and how to move your charts, like what happens if your chart gets moved in a weird spot, those kind of things. Drawing tools walkthrough, because we think learning how to use your drawing tools is a really good idea. Understanding the basics of Chart Trader and how to use the Chart Trader, and setting up the ATM strategies in Chart Trader. So
$50,
it's just under $50, $49.97. But you can just go here to get started. And when you click on that, it will have it right there for you. So,
yeah.
But that is it. Thank you guys. One quick question. Did anybody learn anything new? I don't know if most everybody's left so far, but did anybody learn anything new with those MACDs and the divergence today? Possibly. Yes.
Really? Excellent.
Nice, nice. Yeah, you know what, Tim? I even said, I bet this is going to put a few pieces of the puzzle together for Tim learning this about divergence. Even though it's not the complete lesson, I actually said that right before class. It's like, I bet he's going to learn something new about this with that. So awesome. Brilliant. Glad to hear it.
All right, guys. Thank you for your time. Really appreciate it.
Yes, thank you so much. Awesome. All right. Well, everybody have a great day. I will see y'all in a couple of hours in the next class.
Don't forget to join the lovely ladies. Okay. See you guys.
Yep.
Bye-bye.
Bye.
Yeah.